Biden administration prepares to impose additional sanctions targeting Russia's oil revenues. France plans to reduce budget costs by 50 billion euros under the 2025 budget proposal. And Germany's annual inflation rises to 2.9% in December. Welcome to Qnews Economic Bulletin, where we present the latest developments shaping the global economy. From key market trends and financial updates to regional economic highlights and forecasts, we bring you essential news and analysis to keep you informed. Goldman Sachs has delayed its forecast of gold reaching $3,000 per ounce and now expects the milestone by mid-2026 due to fewer anticipated interest rate cuts by the U.S. Federal Reserve. The bank predicts gold prices will average $2,910 per ounce by the end of 2025, citing stable central bank purchases as a key driver. Analysts estimate monthly central bank purchases to average 38 tons until mid-2026. Gold prices surged 26% in 2024, fueled by monetary easing and safe haven demand. However, the rally slowed down after Donald Trump's elections victory, which strengthened the US dollar and pressured gold. Despite Goldman Sachs delaying its forecast for gold hits $3,000 per ounce until mid-2026, optimism prevails among gold investors for continued price growth in 2025. This follows a remarkable 27% surge in 2024, marking the highest annual increase since 2010.
Optimism prevails among gold investors for continued price increase in 2025. Following a stellar performance last year, gold surged 27% in 2024, the highest annual jump since 2010, reaching near record levels of $2,800 per ounce. Key drivers for this rally include significant central bank purchases, particularly by China and emerging markets, alongside looser U.S. monetary policies, which have bolstered gold's appeal as a safe haven amidst ongoing geopolitical tensions in Ukraine and the Middle East. Wall Street analysts remain bullish, with forecasts from Bank of America and J.P. Morgan predicting gold prices could reach $3,000 per ounce by the end of 2025, while UBS estimates $2,900. However, gold prices recently dipped following Donald Trump's U.S. election victory in November, as market optimism boosted the dollar, stocks, and cryptocurrencies. Analysts warn Trump's proposed trade tariffs could escalate economic risks, fueling inflation, and complicating Federal Reserve policy. Despite this, experts like Darwei Kong of DWS Group expect gold to remain a valuable hedge against uncertainty, with prices potentially stabilizing near $2,800 by year-end. Globally, potential trade wars may push central banks to further ease monetary policies, supporting gold's long-term strength.
Joining us from Cairo is head of the gold division of the Federation of Egyptian Industries, Mr. Rehab Wasif, to discuss latest developments related to the safe haven metal and the expectations for 2025. Welcome, sir, to Qnews Economic Bulletin.
Hello.
Hello, sir. Sir, what are the key factors contributed to the 27% increase in gold prices in 2024? And are these trends sustainable in 2025?
As you mentioned in your introduction, that the election of the United States has a key role on the economic situation in the whole world. So we are expecting to see Mr. Donald Trump, the president, after his victory in the White House in 2 weeks. So we are waiting to see what's the monetary and financial policies he will follow, just to know how things will be going on the market, and especially for the gold price. We cannot predict anything at the moment. We have many fractions that's happening in the world. We have the Middle East crisis, we have the Russia-Ukraine war, and we have at the same time the new virus that showed up in China late. So are we going to be in a pandemic again, or is it going to go smoothly? We still don't know. We cannot predict what will happen. But we are waiting for Mr. Donald Trump to land and take office. Until 2 weeks, we will see how his policies are.
Sir, central banks, especially in China and emerging markets, have significantly increased gold purchases. What role do you see for central banks in shaping gold demand in 2025?
Okay, we can say that it's not only China who is saving gold in the central banks. We have Russia also. These two big economies, they have been having gold reserves for so long. They have been buying gold reserves for so long. They are I can say they are keeping the gold instead of having other currencies like the U.S. dollars to the economy, to lift their economy more and more. They don't want to keep reserves of foreign currencies, especially the U.S. dollars. And it's their strategy in the economy at the moment.
Sir, how do ongoing geopolitical tensions impact gold's status as a safe haven, sir?
Yes, it is. It has a big role on that, especially that we have the Middle East crises and the on and off problems that's happening in the Middle East between Israel and Iran. This is affecting also the petrol and the gas prices.
Positively or negatively, sir? As, of course, a member of the Federation, you're the head of the gold division of Federation of Egyptian Industries. Is the impact negative or positive when the price of gold increases?
We are thinking that the price of gold will increase. But actually, Goldman Sachs has changed the predictions about the gold prices. But we are still positive about the gold prices, especially that we have still some inflation in the United States and the European Union countries. So we can say that we are seeing more increases in the gold prices, but we cannot tell how big that will be, how many percent will it be. But we have seen 26.8 during the year 2024. And since the year 1982 till 2024, we haven't seen less than 22% increase in the gold price. So we can say that we are expecting gold price to be, if it reaches the minimum of that would be like 22% increase in the gold price.
Sir, analysts at Bank of America and JP Morgan expect $3,000 per ounce for gold by 2025. However, Goldman Sachs delayed reaching this figure to mid-2026. How realistic, sir, is this forecast given current market conditions?
As I mentioned in the beginning, that we cannot expect the gold price where it hits, because we have so many fractions affecting the gold price and the economies in the world. So we cannot say that the gold price will be this much at this moment or that much at that moment, or in the future gold price will reach this point. We cannot say that, but we can expect that the gold price will increase. But how much will it increase? No one can say. How much will it decrease? No one can say. But I don't expect any growth in the gold price for the short period of time.
Sir, if trade tensions escalate, how might this influence central banks' monetary policies and their reliance on gold reserves?
We can say that still we cannot, we are in the moment that we cannot predict anything. We are still waiting to see how the policy of President Donald Trump will be going, so that we can say that how the monetary and financial policies will be working. We are still having a big question mark at the moment to see how the policies will be going, how things will be changing. No one can say anything at the moment.
So, sir, the 20th of January apparently is going to be a turning point in everything in this entire world when Donald Trump comes as the President of the United States. Let's wait and see. Sir, well deserved and well said. Thank you very much for your valuable insights. Mr. Ihab Wasif, thank you very much. And back to our news, where Reuters has reported that the Biden administration is preparing to impose additional sanctions targeting Russia's oil revenues. This also includes actions against over 100 tankers carrying Russian crude above the $60 per barrel price cap. The sanctions package also includes measures against Russian oil companies, traders, and insurers. The move comes as President Biden aims to bolster support for Ukraine before President-elect Donald Trump takes office on January the 20th, with Trump's approach to Russian sanctions remaining uncertain. New York City has officially launched its congestion pricing plan, marking the first of its kind in the United States as the city aims to tackle traffic congestion and raise funds for public transportation. The program is expected to reduce traffic by 10% and generate revenue to modernize the city's transportation infrastructure. Motorists will pay a peak fee of $9 between 5 a.m. and 9 p.m. weekends and 9 a.m. to 9 p.m. weekends, with a discounted $2.25 fee during off-peak hours. Small trucks will be charged $14.40 and larger vehicles, including tourist buses, will pay $21.60. Moving on to Europe, where the European Central Bank forecasts a stable Eurozone labour market. Despite a warning resilience, unemployment remains at a record low of 6.3%, even as the economy stagnates. The ECB attributes this to labour hoarding, where firms retained workers despite falling revenues, but warns that this trend peaked in late 2022 and is now easing. While real wages rise and energy costs stabilize, the ECB expects employment to realign with economic output, though no significant job losses are anticipated. Unemployment is projected to remain low in the coming quarters. The Society of Motor Manufacturers and Traders, SMMT, has reported that new car registrations in the United Kingdom increased by 2.6% year-on-year, reaching 1.95 million units in 2024. Despite the overall rise, December saw a slight decline of 0.2%. Battery electric vehicle registration hit their highest monthly level since December 2022, representing 19.6% of the market, but fell short of 22% annual target, with the target set to increase into 80% by 2030. And the United Kingdom government is considering a review of these ambitious sales goals due to declining demand. The auto industry is calling for urgent support to protect investments and investments and jobs. Germany's annual inflation rose to 2.9% in December, exceeding the 2.6% forecast, driven by higher food prices and smaller than expected drop in energy prices. This marks an increase from November's 2.4% core inflation, which excludes food and energy, edged up to 3.1%. Economists warn that inflation could remain high in January due to increasing CO2 emissions and insurance costs. Also, analysts expect the European Central Bank to prioritize long-term inflation control despite the recent price increase. Germany's inflation forecast for 2024 is 2.2%, significantly lower than last year's 5.9%. French Economy and Finance Minister Eric Lombard has announced plans to reduce budget costs by 50 billion euros under the 2025 budget proposal, falling short of the 60 billion euros target set by the previous government. Speaking on Monday, Lombard said that the government aims to reduce the budget deficit to between 5% and 5.5% of the GDP by 2025, compared to a projected 6% in 2024. The revised target seeks to balance cost-cutting measures with economic growth. The ministry also highlighted opportunities for constructive dialogue with left-wing parties and the National Rally as the government works to secure parliamentary approval for the budget. In Asia, Japanese Prime Minister has warned of potential trade tensions following U.S. President Joe Biden's decision to block Nippon Steel's $14.1 billion acquisition of U.S. Steel. In a press conference, he called the move regrettable and said he would seek clarification on the national security risks cited by Biden. The decision has raised concerns within Japan's business community about future investments between the two nations. Nippon Steel, the world's fourth largest steel producer, plans to challenge the decision in court, and also the CEO vowed to pursue all legal avenues, reaffirming the company's commitment to expanding in the United States.
このことは我々としても重く受け止めざるを得ないものでございます。テレビの伊藤と申します。よろしくお願いします。リニア個別の企業の経営に関する
Indonesia's 2024 budget deficit stood at 507.8 trillion rupiah, or 2.29% of the GDP, lower than projected 2.7%, but wider than the 1.61% deficit in 2023. This provides a buffer for the 2025 budget, which forecasts a deficit of 2.53% of GDP. Finance Minister highlighted surplus cash worth 45.4 trillion rupiah, partly due to higher debt insurance as a boost for the new administration under the President Prabowo Subianto. In 2024, revenues grew 21% to 2,842.5 trillion rupiah, while expenditures rose 7.3% to 3,350.3 trillion rupiah. Planned spending for 2025 is set at 3,621.3 trillion rupiah. Vietnam's economy has grown 7.09% in 2024, reaching $476.3 billion, fueled by strong exports and foreign investment. The fourth quarter saw a 7.55% growth, the fastest in over 2 years. Exports rose 14.3%, while imports increased 16.7%, yielding a trade surplus of $24.77 billion. Coal imports surged to meet power generation needs, and foreign investment inflows grew by 9.4%. The government aims for 6.5% to 7% growth in 2025, with a target of 8% growth. In the MENA region, Egypt's finance minister has announced that Egypt is set to receive $1.2 billion from the International Monetary Fund in January. The minister clarified that Egypt will not seek an increase in the program's value and is negotiating with the International Monetary Fund to reduce VAT exemptions to 3 or 4 items for nearly 19. He also expressed concern about the $152 billion external debt, pledging to cut it by $2 billion annually. Egypt's $16 billion debts due to this year will be covered 80% through resources and 20% via soft loans from international institutions. The Saudi Public Investment Fund has successfully secured its first Murbaha financing worth $7 billion as part of its medium-term funding strategy. The government also initiated the sale of its first international bonds of the year, offering 3 tranches with maturities of 3, 6, and 10 years, prices of premiums of 120 to 140 basis points above U.S. Treasuries. Saudi Arabia aims to diversify its funding sources to meet projected financing needs of 139 billion riyals in 2025. The Public Investment Fund plans to channel the funds into major projects critical to the kingdom's economic transformation. The Central Bank of Kuwait has instructed local banks to tighten controls over financial transactions made by bank cards, especially online payments that do not require a one-time password. Banks must enable customers to adjust their card payment limits either through branches or online banking, with notifications sent for any changes. These adjustments require prior approval from the central bank. The measures aim to strengthen the controls and enhance internal security systems and combat fraud across all types of bank cards, including credit, debit, and prepaid cards. Inflation in Turkey dropped to 44.4% in December, the lowest in 18 months, following 7 months of consecutive declines. Monthly prices rose by 1.03%, driven by higher education, housing, and restaurant costs. Food and beverage prices slowed to 43.58% from 48.57%. The central bank cut its key lending rate by 250 basis points to 47.5% on December the 26th, with plans for more cuts in 2025. Finance Minister stated inflation will continue to fall due to delayed effects of monetary policy and reforms to boost supply. That's all for now. Here's a wrap-up of what we've been covering. Biden administration prepares to impose additional sanctions targeting Russia's oil revenues. France plans to reduce budget costs by 50 billion euros under the 2025 budget proposal. And Germany's annual inflation rises to 2.9% in December. This concludes our news bulletin for the hour. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at Qnews EG to stay informed. Thank you for watching and stay tuned for more updates on Qnews.